The Reserve Bank kept the cash rate on hold yesterday and said the economic outlook remains highly uncertain. Joining us live is our business reporter, Ed Boyd. Now, Ed, good morning to you.
Morning.
So, the RBA is closely watching the next round of US President Trump tariffs. So, certainly, whatever is decided tomorrow at 7, it's on her mind.
Very much on her mind. At the press conference yesterday, there was a bunch of questions about the Trump administration, and we got a few answers out of Governor Michele Bullock. She's very clearly watching the impact of tariffs and kept saying it's all really to do with the impact on China, our biggest trading partner. If China's economy really starts to slow down, it's going to have big implications for us in Australia. It's going to have implications for our economic growth, for our jobs market. So these are some of the things that she obviously watches closely, along with the board of the Reserve Bank when they set the cash rate, Pete.
Might this accelerate talk of rate cuts?
Accelerate talk of rate cuts.
If these tariffs come in and they hurt the economy, and you know she did that. Well, there is that line about it yesterday. Might bring forward cuts?
Well, right now there's a 58% chance of rates being cut at the next board meeting, which is 20th of May. So that's 6 weeks from now. But obviously, if there are some serious implications, our economy starts to go off the rails and they need to do something to stimulate it, then rate cuts is one of the things that they can always do and they always rely on. That's their main monetary policy tool. Yeah.
OK. Let's move towards gold. This has been an incredible story because of the uncertainty in global markets, right?
Pete, it's been a phenomenal story.
Safe havens, so it's now 3,100 US.
3,100 US an ounce, which is an all-time record high. In Aussie dollars, that's $5,000 per ounce. Gold has been on a tremendous bull run for the past 3.5 to 4 months.
Yeah.
It's actually been on a run for the past 3 or 4 years. The trajectory, it was below $2,000 an ounce a few years ago. Now it's above 3,000. And there's economic forecasters and analysts out there that think it could go much higher. So we're seeing a lot of new gold ETFs have been started up over the past few months. There are financial services companies trying to take advantage of this, and investors are really concerned. They've seen their returns completely erased over the past month and a half as the markets around the world have fallen. And a lot of them are clearly moving money out of those assets and into gold and buying gold. They're buying gold ETFs, they're buying gold mining stocks. A lot of Aussie gold miners have been some of the best performing companies on the stock market the past month and a half, 2 months.
It's been incredible. So Warren Buffett, he's not a fan of gold, right? Because he says, you get gold and in 20 years it's still the same amount of gold. So he doesn't like that form of investing. But I mean, if we're talking $3,100 an ounce now and it's just sailing north,
it's obviously going to be a good investment.
Yeah.
With JP Morgan, I think, and some of the big banks in the US have done modelling, thinking it could get to 3,500 US, potentially around that area, potentially even higher. Look, the fact is, if more people keep buying it, the price is probably going to keep increasing.
Well, because you've got more people, supply demand.
More people go in there.
For more people going for a smaller product.
Exactly.
It's interesting. Yeah, it's a great story, that. Good on you, Ed. Thank you. Chat again soon.